Kaya Biz with Gugulet and 4P.
On Kaya 959. On the street, on the air.
On the street, on the air, we're quite literally everywhere, and you're listening to Kaya Biz here on Kaya 959. Well, of course, lots that's been happening in the news flow, especially in the world of all things arts and entertainment, as we've witnessed with Black Coffee winning a Grammy. And trust me, right, as the numbers person, to actually try to find out how much do you win or how much is a Grammy worth, and not finding much in terms of any figures. I understand that there is no monetary prize, but definitely the recognition of the award is something that is quite substantial. And looking at most recent figures, also showing that there's a build-up in terms of the cost that might be associated with the award and the award ceremony itself. But that's an interesting conversation I think we'll have with you in the upcoming days, right? Evaluating the worth, and I guess it's about the value that these conversations do bring overall that adds an ongoing benefit. But to shift gears now into another conversation that we like to have, anything to do with creating wealth is exactly right up our alley here on Kaya Biz. And this evening we're going to address a theme and a topic and conversation that many South Africans tend to battle with, which is unpacking or understanding how to invest. And perhaps this takes us back to basics, many basics for some of us, but it's always important for us to get a refresher, no matter how accomplished we might be with our investment goals and strategies. But tonight, this is demystifying it and simplifying it, even for those with a little bit of change in their back pocket. And that's how you can start an investment portfolio with 100 Rand. Yep, it all starts with the little basics, but as you know, they say take care of the cents and the rands will take care of themselves, take care of the pennies and the pounds will take care of themselves. So to help us unpack this particular conversation, we're joined by Omega Shange, a data analyst by profession with 7 years of experience in finance and psychology. Omega, good to touch base with you again, and thanks for joining us.
Thank you. How are you doing?
Keeping well, thank you. Quite excited to speak to you this evening.
Thank you. Very glad to be here.
Definitely. I think first things first, I always love it when we talk about the psychology of money, right? And the psychology of wealth. And I guess given your experience and background and exposure to this, you're well aware as to how sometimes there's a perception that in order to make money or have money, you need to start by having money. In exactly that point.
Yeah.
I'm intrigued by that psychological perception that continues to exist in the market. But help us unpack it. Why is there this belief and this misconception in the market that in order to make money, one needs to have money already?
Well, the misconception of that you need money to make money is quite an old one. You can go back through history and look at the present time. There's a lot of misconceptions in the public about how you need money in order to make money, when in fact what's needed is that you need to start small and then build your wealth or build your investment portfolio or build your business, whichever it is, whichever way it is that you want to make money. The misconception persists because socially, when we look at people who do invest within the public space, we tend to perceive them as people with money. So that's one thing. The other thing, though, that's a huge factor historically was that investing was always actually an expensive exercise. So, for example, with a lot of services that you would have had to buy, say, 10 years ago, you would have had to have a lot of money to actually open up an account. So something like 10,000 Rand to 100,000 Rand to actually start buying, say, shares in the market. So for that reason, it became a normal thing to believe that you need a lot of money to actually invest, simply because you needed a lot of money to open up an investment account, which of course today is not the case. Technology has changed all of that. Literally anybody can start investing. If you have 1 Rand, 10 Rand, 100 Rand, you can start and then build your portfolio slowly.
Yeah. And let's talk about the practicalities of that, right? Because one would think, okay, 100 Rand, that's simplified. That's what? A takeaway meal at one of these takeaway stores in South Africa. Maybe a couple of cups of coffee between friends and a muffin. But 100 Rand sounds basic and very easy to access. Help us unpack that figure and, of course, the opportunities that might exist with that particular sum.
Well, if you look at the advent of fractional shares, you could literally buy part of a share of a company or of an asset for as little as 1 Rand, meaning theoretically you could buy 100 fractional shares with 100 Rand and be invested in 100 companies. Of course, that might not be necessarily prudent, but that's something that you can actually practically do. The question then becomes, what's the opportunity with 100 Rand? For me, in my opinion, the first opportunity that you get with investing with 100 Rand is actually the learning opportunity and then getting yourself into the door, right, and into the habit of actually considering and thinking about investing. So when someone starts small with 100 Rand and they build the habits, it's obvious that over time, they're going to invest a bit more money, say 1,000 Rand, and then when their salary goes up, they'll invest even more money. So 100 Rand is a perfect entry point to learn and to actually start building the habits of investing, because wealth is necessarily a habit-building process, not actually about money. And that's where we sort of get things wrong. We think that it's about money, when actually, first of all, it's about a habit-building process. And then once you have the right habits, the right behaviors, the right mindset, and the right perspective, then you can actually start investing even more money. So 100 Rand is the perfect start to sort of feel what it's like to invest, but without feeling too nervous, because if you say to somebody, hey, open up a brokerage account and deposit 10,000 Rand, they'll get very afraid because they don't know what to do. But if you say, here's 100 Rand, right, and learn from Google or from any other place a process on how to actually invest, how to analyze the markets, how to look at industries, you'll learn a lot more about your country, and you'll learn a lot more about businesses, but most importantly, you'll learn a lot more about how to look at money and how it actually is made in the world. And that would be something that's an advantage for anybody going forward into the future. And 100 Rand is all it takes to start.
Omega, you mentioned something so important. Building wealth is about habit and building processes. Help us unpack how we can build and establish those habits. What needs to change, I guess, or be influenced then by our behavior?
Well, it's a few factors. So when it comes to building wealth, there's mainly two aspects. There's the skill of generating money, all right? So money is mathematical, and you have to generate it through selling something to somebody and then having them give you money, right? So all money that we ever receive as people will come from other people, whether it's the government, whether it's our jobs, whether it's a grant, whether it's a bank loan, but there's always another person giving us the money. So you have to develop the skill of actually realizing what is valuable that you can give to people in order to receive money. So a basic skill that you can develop that everybody has access to actually exercising is learning how to invest in shares. Because any one of us can open up an investment account and learn how to buy shares and learn how to sell shares in order to make a profit. So that's one aspect of it. And then there's the personal finance side of things. What tends to happen because of how investing has become so easy, a lot of people are starting to invest, which is great. But then what's happening is they'll make money in their portfolio. So they'll make, let's say, 5,000 Rands in a year in their investment account, but then they'll spend 6,000 Rands in their personal life, meaning they're actually at a loss, right? Because your money, you have to look at it in totality, not just from your investment account, but actually within your personal life as well. So the second thing you have to develop is the right habits, saving and investing. The cliches are true. Save 10%, invest another 10%, and live below your means. If you do just those three things, you'll be able to increase the sums of money that you have to actually invest, and that will obviously increase the sums of money that you're getting as a return in whatever activity you're doing, especially if you're in the stock market.
And that's also the part that confuses a lot of people, right? Because you might get the behavior right, you might get the understanding of the market correct, but then it's about putting in that 100 Rand and waiting for it to grow, right? And that goes to unpacking the metrics, which sometimes becomes a bit overwhelming for us and for investors like myself. Hence, we choose passive investment instruments as a retail option, right? Because then you're not necessarily looking at dividend yield and what's happening with the price, the PE ratio and the likes. And I'm keen to get your perspective as to how, through your one description of the 100 Rand investment to start off with, how it breaks it down in terms of understanding the macroeconomics, unpacking the company performance, and unpacking the potential growth that one could get from the investment.
Okay. When you're investing, there's literally one activity that you're already doing, and that is you're attempting to predict the future. The question then becomes the future of what? The first thing that you're trying to predict the future of is macroeconomic themes. And then the second thing is you're trying to predict the future of, say, a specific geography. So, for example, if you're investing in South Africa, then you're trying to actually predict the future of South Africa's economy. You're also trying to predict the future of the various industries that are within South Africa. And then you're trying to predict the future of how a company will perform in the future. And then you're trying to predict the asset price, right? And that's the thing that really matters, obviously, to an investor, because you can have a good company, you can have good industries, you can have a good country, but if the asset price goes down lower than the price that you bought it for, then you're going to lose money. So it's quite essential to actually focus on having a holistic process that helps you analyze the macroeconomics, helps you analyze the geography, helps you analyze the country, helps you analyze the industries, and then obviously helps you analyze the company itself, and then actually analyze the asset price. And it's my belief that anyone can actually learn this. We all actually are very intuitive when it comes to looking at things in our personal life. We can all walk into a shop and say, hey, this particular store that I'm buying food from, I'm seeing certain products are coming off the shelf very fast. Yep. All right, let me actually do some Googling and find out what's going on. Then you discover that there's a particular need in society. We all can understand that. There's no hidden secrets behind that. It's just about actually writing down your process, saying, okay, this is how I'm going to research macroeconomics. This is how I'm going to research the industries. These are the tools I'm going to use. And there's a lot of public available data, say from government journals, academic journals, and various other financial institutions that publish free research for people to consume. And most of the research that's actually published isn't necessarily academic in language. It actually has very plain language that anybody can actually understand. And then obviously looking at asset prices, just looking at the history of a price and then trying to determine where other investors would prefer to buy or sell it for. And anybody can actually do that. And to learn the process and actually feel what it's like to exercise the process, 100 Rand is the perfect entry point in order for you to do that. And the reason I speak about the 100 Rand issue is because I'm trying to push people away from gambling with the stock market. So what's happening is a lot of people have started investing, and that is great. Technology has made it easy for you to download an app, deposit money instantly, and in less than 10 minutes, you're buying your first share. However, we now have to move away from just doing things randomly, but then moving to how can I develop a process. And the more people start investing, the more they realize they have to have a process, the better things are actually going to be for us as a society, because people who care about actually the shares they have invested in a country, they end up caring about what's going on in the country because they are invested in that country. If I have my portfolio here in South Africa, I care about the future of the country, and I have a stake in the country through investing in the companies that are operating in South Africa. And so that's where now being able to analyze shares contributes majorly to society. Just by simply opening up an account and starting to invest with 100 Rand, you can actually change your outlook as a person and also change the country, because you're contributing to the knowledge base that ordinary citizens have through doing proper research.
Yeah, I'm glad you mentioned that, because a lot of it does speak to research and, unpacking the essentials in terms of monitoring and understanding the investment arena. And on that note, what I'm intrigued to find out from you is, through your tutorials, through the videos that you share on social media platforms, and trying to encourage people to get into the investment game, what the pickup has been, and are there typical mistakes that we as novice investors still might make when trying to enter into the investment arena?
Yeah, there are standard mistakes that most people do make. And it's very common that you will make mistakes in the beginning because you have to pay your school fees. That's the way I always put it. And it's better to pay your school fees with a very little amount, but you will pay the school fees of just getting into the market. Sometimes, of course, you can avoid paying school fees. So the common mistakes that actually happen is people look at the history of the company and they then assume that the future is going to be the exact same thing. And that's obviously an era of not doing proper research to try and understand what are the future needs of society. If we look at, let's say, we speak of, I'll just pick one from the top of my head. We look at energy needs of society. We're very much aware that companies that are currently king when it comes to the energy sector might not necessarily be the rulers in the next 30 years, simply because the energy needs of society are changing, and of course the technologies are changing as well. So to look at them historically and say, well, these are the companies that are still going to be the companies that rule the energy sector in the future would be obviously a very big mistake. So that's one mistake, using history to try to determine the future. Another mistake that people make is they don't pay attention to the economic themes that exist within a particular region. They just only focus on analyzing a company. So they come to the conclusion that a company is good, And then they don't realize that actually, just because the company is good doesn't mean that its share price is going to go up. You still have to understand that when you invest, you are actually buying shares at an auction, right? So, for example, the Johannesburg Stock Exchange is an auction. It's an auction for companies, right? And so there are people there also buying and selling assets just like you. And so you have to understand the behavior of the people at the auction. So just simply looking at a company and then thinking that you're giving that company money by buying shares is a huge mistake. You're not giving the company money when you buy shares. Instead, you're buying shares from somebody else who's also selling them to you. And you're also hoping to sell those shares to somebody else who thinks the price will increase higher than what you're actually selling them for. And so those are the two big mistakes that I've seen people make, using history to try to determine future and then basing their investments only on company reports instead of looking at the larger macroeconomic picture that the company actually exists in.
Sure. That is so important because I get you. There's typical mistakes that we make and we need to look at the broader picture and understand that as you're buying the stake in that particular company, someone else is selling it. So it's always a dynamic of who sees optimism and who's already reached their point of saturation in terms of returns that they'd like and, then sells that particular stock. But really appreciate your time today, Omega. Where can we find you to get more insight and information?
The best place to find me is on Instagram at moneymondays.co.za. So if you go to Instagram and search for moneymondays.co.za, you will find me right there. DM, have a chat. I always enjoy speaking to people.
Awesome. We appreciate that. Professional DMs.
Thank you.
Right? That's what we want.
Yeah, of course. Of course.
I'm teasing you. Thanks so much for your time this evening, Omega. Really appreciate it. Omega Shang is a data analyst. He's also a professional, investment professional with experience in both finance and psychology. So helping us unpack some of the basics there, right? And sometimes it's important for us just to take a few steps back to remember that, hold on, this is actually how one can gain entry into the market, because whilst you might have a booming and flourishing investment portfolio, we need to bring other people along with us for this journey, whether it's our children, whether it's our siblings or members of our community, those who still might be apprehensive or looking for a quick buck. We need to remind them that, hold on, this is how we can simplify this journey for you. So this is why we have these important conversations to create and build awareness within the investment community and quite literally making the circle bigger.
Kaya Biz with Gugulethu Mfuphi, Monday to Thursday, 6 to 8 p.m. on Kaya 959.
On the streets, on the air.